So, hi everyone, welcome again. This is another fan requested video. So, we had a viewer who requested us to look at this business, and this is a very interesting company. I never heard of them before. And Ted, have you heard of these guys before? MGC Pharma?
No, new to me as well.
New to me, but they are dealing in what they call the nature to medicine industry. So they deal with phytocannabinoids and plant-derived medicine. So just a bit of history, just a bit of information and context there. Phytocannabinoids, they're essentially the chemicals, the molecules within the cannabis plant, and there are 113 of them, of which the commonly known ones such as THCD, CBD, CBG, these are the ones that are part of that 113. Now, just to give you an idea, the CBD market is quite a hot one actually in terms of growth. So it's considered to be growing around, or forecasted to be growing around just over 21% in compound annual growth between 2021 and 2028. So quite a lucrative, or at least a forecasted to be a lucrative industry. It'll be interesting to see how that fared during the COVID pandemic, because 2021 obviously is going to have an effect on that. But CBD is just one of them. MGC are trying to deal with as many of these phytocannabinoids as possible. But that is not the only drugs that they use or the only substrates that they use. They do have other products that are apparently in phase 3 trials in countries like Israel to see how they have an impact on moderate COVID moderately affected COVID patients. So stick around till the end as well, because during this video, Ted and I are going to share why they went public and what story do the finances say about that. So Ted, over to you. This is going to be an interesting one.
So thank you very much, Moe. So good to see you guys, and welcome to all of our viewers. Absolutely. So we get this call up from, I love the idea of a fan, but certainly one of our viewers who says that they want us to have a look at the accounts. So I've never heard of MGC Pharma. Here they are. So the annual report and accounts. And we're just going to whiz down to the profit and loss account. So all of this, I kind of just, this tells you what the company is up to, but there's a lot of marketing speak in there and a lot of kind of fluff and isn't it all wonderful? And there's the director's remuneration, et cetera, et cetera, et cetera. And then we finally get down to the audit report. Now, I was quite interested here. We got an auditor's independence declaration, but there wasn't an auditor's report. And I was like, that's bizarre. I wonder where the auditor's report is. It's actually further down. And we'll come and have a look at that in a minute. But so here is the statement of profit or loss. And what we see here is top line. So you were talking about the growth in the industry. Well, that's very much shown through this company here, because you can see the top line. Let me just move this so we can see all the numbers. Here we go. So the top line growth of, by my calculations, we're looking at about over 200% growth in the top line. So they're seeing a massive increase in growth. Absolutely fantastic. Everything is going absolutely guns. Unfortunately, though, if you start to kind of look down through the numbers, you see the operating loss has gone from 11 million to nearly 19 million. And the bottom line loss of 8.6 million, 8.5 million, is now up at nearly $20 million. Okay, now this is driven through these numbers here, which is effectively the kind of, a lot of the research that they're actually doing, et cetera, et cetera. So, I mean, these guys are loss making. I mean, we're talking 2020, that's a 932% loss margin. Okay, so they're just so we're clear here, on sales of $2 million, they are making a loss of $20 million. Okay, so they are losing money very, very rapidly. Now, we've talked about pharma before, and we've admitted we don't, we're not 100% familiar with the industry. I do understand that a lot of this is about investment, you find the right drug, and then you sell that drug, and you make your fortune, and the revenue stream from that drug then pays for you to develop new drugs going forward, for example. But this company, it doesn't really have the drug from the past, and it's hoping that it's going to find that kind of that nugget. But right now, £20 million loss on $20 million loss on $2 million sales is going to put a big financial strain. Let's go and have a look at the balance sheet. So here's the balance sheet, and the first thing we notice is the size of the balance sheet has shrunk significantly. So here's this 13 million of total assets is now only 8 million. And it's mainly due to this intangible asset has been effectively written out. I'm not sure exactly what that relates to. We could have a look at note 14 if we wanted to. What I was really interested, though, is this figure up here, this cash figure. So they got about $2 million in the bank. They had 10 million. They then had 2.3 million, and now they've only got $2 million. Now, you might say, well, Ted, that's only a small change, but there's an issue going on here. They've got no debt. So looking at the liabilities, they've got some trade liabilities, and that's basically it. There isn't really anything else. And there's a bit of lease liability here, but there's nothing else. There's no debt funding this company. Okay, there's no debt funding this company because nobody's going to lend money to them because they're too high risk. If we look at the cash flow, we see the cash flow. So 2020, from trading operations, they lost $10 million in cash. Okay, so their burn rate at the moment is they are burning $10 million a year. Now, the reason they survived is because they generated $10 million in cash, and they generated $10 million in cash from the issue of shares. So effectively, they've floated, they've raised $11.4 million from the share, and they basically burnt through that by payments to suppliers, payments for research effectively. So they've got 2 million left in the bank. Now, if they're burning at $10 million a year and they've got 2 million in the bank, it doesn't take a rocket scientist to suggest that this company is, well, they're running towards a cliff edge, and they're hoping that the people making the parachute will have it fixed in time by the time they reach that cliff edge. So this is a company that is effectively, it's burning $10 million a year. They've got $2 million in the bank. It doesn't take a rocket scientist to realize that they're running out of cash. It's like, I don't know, it's like running towards a cliff and hoping that the parachute that you're stitching together is going to be ready in time by the time you actually reach the cliff edge. It looks to me like the parachute isn't 100% ready and the cliff edge is getting a lot closer. So looking at these numbers, I kind of thought, hold on a sec. I want to go and have a look at the director's report and to go and see what's going on in the company. Director's report, we found quite an interesting comment. So this paragraph here is in the director's report, and it talks about salary cuts for the directors. Now, as soon as the directors are taking salary cuts, you know that things are getting pretty shaky. So not only are they trying to cost cut within the business, the actual board of directors are taking cuts as well. So this then got me thinking, I've got to look at this auditor's report. What do the auditors think of these numbers? And the auditor's report is actually right at the end. And it's probably right at the end for a reason, because they don't really want you to be looking at the auditor's report. So here is the independent auditor's report, Ernst & Young, great set of auditors who give their opinion. And then within the basis of opinion, they talk about this material uncertainty related to going concern. Now, we've mentioned this before when we looked at Liverpool Football Club, if you remember. So going concern says a company is trading and expected to continue to trade for the foreseeable future. So if we question a going concern, we say we don't think they're going to be continuing to trade. Material means really very significant. So they're basically saying, we really want you to be aware of note 2B, and we'll have a look at note 2B in a minute, but it says, I want you to be aware of note 2B, which describes the principal conditions that raise doubt about the company's ability to continue as a going concern. And these events or conditions indicate that a material uncertainty, i.e. it's, we have no idea, will the parachute be stitched together in time? We don't know, that may cast doubt on the group's ability to continuing as a going concern. And of course, if they owe you any money and they don't continue as a going concern, then you are going to take a financial hit. So let's go and have a look at note 2B. So here is note 2B, talks about the basis of preparation, and we notice this comment here, the financial report prepared on a going concern basis. So in effect, you prepare it on a going concern basis, saying that we're still going to carry on trading and that money I receive in the future will be able to pay for amounts that I owe today, for example. So as a director, it's illegal to continue to trade as a going concern, but it's not exactly a sort of a very a defined line. So you may remember a comment from a previous company we looked at where companies go bust in two ways, very slowly and very quickly. At the moment, these guys are in the slow stage. But they do talk about the consolidated group cash flow forecasts for the next 12 months indicate that they need to be dependent on having access to additional funding. So they basically need to find people who are going to be able to continue to fund them. Otherwise, they're effectively going to run out of cash. They talk about they're satisfied that the going concern preparation is appropriate due to the availability of funding under the convertible securities financing agreement. That's this line here, with Mercer Street Global Opportunity Fund, the investor, and the first tranche under the agreement, $2.25 million, etc. And this came after the reporting date. And then at the discretion of both the company and the investor, up to a further $13 million can be drawn down. Okay, so they are really, very, very dependent on ongoing support from this investor. Without that support, it doesn't look like they're going to be able to, to continue. So, they've got their scientists are kind of, they're bubbling in their test tubes and they're doing their experiments and they're doing everything they possibly can to create the drug that is going to kind of, lift them out, going to generate them the revenue. So it looks to me, and I thought it's interesting, the comment you made, and it's also in their accounts about COVID-19, that slightly smacked to me of desperation. Why would you need to be looking at how, cannabinoids are going to help with COVID-19 when, you've got vaccination programs rolling out across the world? It's kind of, it's high risk, this company. So, so we can see the reason that they floated, and here is the share price, which is, they only recently floated in 2021. Here's the share price. It's higher than their flotation. There's no market capitalization. There's no PE ratio at the moment. It's kind of bouncing around. It's, it's a high risk company. There's obviously no PE ratio because there's no earnings. This is a very, very high risk investment. If they get it right, if they can find a way out of this, then maybe you're going to be making a lot of money out of this. But I would feel slightly more comfortable sticking my wealth on the number 17 on the roulette wheel in Las Vegas than investing in this company right now, because I think I'm going to get a more guaranteed return, if that makes sense. So that's just my opinion, obviously not my advice, and maybe somebody knows more about the kind of the development and the contracts in the pipeline and what the business is up to, and there is light at the end of the tunnel. But from where I'm sitting, the tunnel bends in several directions and I can't see any light at the moment, Moeed.
Yeah, and that's really interesting you mentioned that. And just for clarity, that particular trial for the COVID application was not one of their phytocannabinoids. It's actually one of their plant-derived drugs. But they are, from what I read, they are kind of winning some contracts. They won one with a Swiss pharma business. What was it called? Pharmagen, I think it was called. But that was only just over $400,000. So they seem to be making some sales and some headway. But like you, I'm of the opinion that from a financial perspective it doesn't look like they're going to have much legroom. But I would love to hear if anyone watching this is an expert in the phytocannabinoid market. Do they think that this business actually has some legroom? Are there investors out there who are willing to bet on them and see them through for some big returns? So as usual, like, share, subscribe. If you, like I said before, this video came from a fan. So if you're a viewer, if you're a fan and you would love to have us analyze the financials of another company, drop us a note in the comment section and we would love to do that for you. So until the next video, thank you very much. Ted, thank you. That was really interesting.
No worries. Good to speak to you, Moeed. Catch you later.